Just about a year ago, David Burrows recommended these three following stocks. He's the president of Barometer Capital Management, of course. January 5th, and you're out of all of these, by the way, for your clients. Alerian MLP was trading just around $17. It's up 5% since then, but you got out when and why?
We've had big exposure to midstream energy assets all through last year and continue to today. The U.S. Dividend payers had some pullback in November with concerns around changes in tax policy, and so we focused more on the Canadian names.
So you pulled out of that, but you made a bit of money?
Yep.
I'm seeing, Alerian, is it infrastructure, oil and gas services, or?
It's midstream energy infrastructure. So ultimately in the U.S., a lot of the pipelines and processing facilities are held within master limited partnerships. That's problematic to invest in as a Canadian investor because you have tax issues. So one of the ways you can do that is through this ETF, which holds master limited partnerships, and they mitigate the tax obligation. So it's something that I would own today, but we have some other exposure in that group.
Such as in Canada?
Well, Interpipe has been a big one for us. Keyera has been a big one. We've got a whole handful of them.
Kraft Foods, which is now Mondelez, MDLZ on the NASDAQ. You're out of this. We know they've split off into two separate companies. How come you got out?
Well, we bought this leading up to the spinoff, and our expectation was that there would be some value created in the proposition, and that was the case, fortunately. But again, in October, November, as we started to see some pullback in markets, we started to back off the group.
And would you reconsider either one of the other, Kraft or Mondelez?
I think the Mondelez is more interesting because it's really more the play on global growth and the global consumer. So they're really rolling out the snack food business to the global consumer, and there's probably a pretty good growth opportunity there.
GlaxoSmithKline, big pharma, GSK on the New York Stock Exchange, trades overseas as well, of course. This one, bit of a gain, about 1.5%, was trading at 46.13. You got out of this. How come?
Well, again, pharmaceuticals is a group that we do have a pretty good exposure to. We have a basket of them. We tend to start with a basket and we work our way into the strongest positions. So certainly Abbott Labs and Pfizer and Merck had pretty good years. GSK we came out of along the way. And all of them strong dividend payers. And by the way, the pharmaceutical group looks as though it's broken out of a 12 or 13-year base and likely could trade higher from here over the next 2-3 years.
And are you still in some of these other names you mentioned, Abbott? And
yes, we are. Yeah, as well as the ETF, which owns a lot of the pharmaceutical names. Amgen would be another one.
Right. And remind us, obviously it depends on fundamentals and case by case and so on, but what's your holding period, or what's the turnover in your portfolios?
It really varies. Certainly we enter every position with the hope that it's one that will last in the portfolio a long time. We run stops on all of our positions. We tend to, as we go through a stronger market, pyramid into the stronger names. And in the last couple of years, probably turnover has been higher than it would typically be because we've had a very choppy market, which is tricky ultimately if you're in more of a trend-following process, which has caused a little bit more turnover than we would like to see.
Okay, David, GlaxoSmithKline, Kraft Foods, Alerian MLP, you're out of each of those investments. Top picks in just a while, but right after this, we'll get back to the questions for David Burrows.
Now, kids, I want you to be really quiet for Grandma.
No games, okay?
No games.
No shouting.